Hello, everybody, and welcome to today's webinar, Doing Business in Ireland. Thank you so much for taking time out of your day to join us. My name's Grania Loughnane, and I am Managing Partner of Tully Rinckey Ireland, and I'm really excited to be hosting this session today. I'm pleased to introduce today's speakers, Greg Rinckey, who is one of our founding partners and is based between our Albany and Manhattan office. Greg Rinckey and Matt Tully opened the doors of Tully Rinckey in 2004 and has since expanded their service offering to 10 locations across the US, with an office in London and Dublin also. Dublin was their first office in Europe, and it was the gateway to their European expansion. Emmanuel Dowdall is Executive President of North America for IDA Ireland and has spent years immersed in the European American business world. IDA is Ireland's agency in charge of attracting investors from different sectors seeking to do business in Ireland. Claire Condren is a tax consultant in TP Fox, a boutique tax firm offering top-tier tax advisory services to its high net worth national and international client base. Claire has extensive experience working in tax with a particular emphasis on establishing corporate structures in Ireland, inheritance, tax planning, and corporate restructuring. Just to let you guys know, we'll be answering questions at the end of the session. If we don't get to your question during today's webinar, please email our email address, which is at the bottom of these slides, contact@tullylegal.ie, and we will be sure to follow up afterwards. So without further ado, I'll kick off things myself by discussing Ireland at a glance. Really, Ireland's just a great country. I suppose in 2019, Ireland ranked 4th on Forbes lists of best countries for business. Forbes noted that Ireland was the only country to be ranked in the top 15% in all 11 metrics they used to examine the best country. Fundamental to all businesses, and Claire will touch on this point, Ireland's corporation tax rate is one of the lowest in the world at 12.5%. A huge importance to us is our membership to the European Union, which allows companies to benefit from free movement of people, capital, goods and services between 27 EU member states. We're the only English-speaking European country as well. We have a highly educated workforce. We have a graduation rate of 46%. The Organisation for Economic Cooperation and Development have an average graduation of 39%. We're a clever workforce, we're highly educated. And finally, from a common law perspective, like the States, we're common law. I'm going to move on to my next slide, Pat. Let me see. So why would you guys choose Ireland for business? There's a number of benefits for doing businesses in Ireland. I can talk through the points quickly on this slide. We have the talent. We're EU's youngest population and workforce. We're first globally. We rank first globally for attracting and retaining talent with a proven track record. We're first for productive workforce. We're first for adaptability. And we're first for productivity in Ireland. Tax, again, which is fundamental to any business. Our low tax rate of 12.5% corporation tax rate is extremely attractive. There's also a highly educated workforce. I'll just run through these points quickly. We have a highly educated workforce, ease of doing business with access to the EU single market, and also cutting edge companies. We have a number of top tier companies in Ireland, Google, Facebook, who all avail of the 12.5% corporate tax rate. Again, talent mobility, 16% of our workforce is non-national, and we have access to a large EU labour pool. We're deemed as a trusted partner to do business with, which is key as well. On that note, I will move on to Greg Rinckey, who will discuss the benefits of doing business in an EU country. And on that point, Greg can actually speak from experience from setting up a US firm into Ireland with their first European hub being in Dublin. Greg, I'll let you take the reins.
Thank you, Grania. Benefits of doing business in an EU country. Customers, the EU has a potential customer base of 500 million over 27 countries. There's free movement amongst the EU member states, which benefit from the free movement of goods, services, capital, and people between other member states. There's also a single currency in the EU. And the single currency is more cost effective as there is no cost in currency conversion and there's less risk. Also, there's a single market. The EU is in an economic zone larger than actually the United States and Japan, with a combined GDP of $16.2 trillion. Right now, also, Ireland is the closest EU country to the United States, and that's one of the reasons that we actually picked Ireland. If we can move on to the next slide. EU funding opportunities. There's enormous opportunities for American businesses to obtain funding through the European Union. And for small businesses especially, the EU has 5 big funds for businesses. The first is the European Regional Development Fund, and this is a fund for regional and urban development. There's a European Social Fund, and this fund is for social inclusion and good governance. There's a cohesive fund, and this fund is for economic convergence by less developed regions contained within the EU. There's also European agricultural funds for rural development and maritime and fishery funding as well. For researchers, the EU runs a number of funding programs and fellowships for individual research grants, and the EU awards millions of dollars in prizes each year for researchers. So there's an enormous opportunity for researching grants. There's also non-governmental and civil society organizations, and businesses and organizations can sometimes be eligible for funding if they're active in EU policy or on a nonprofit basis. And funding is awarded through different categories: agriculture, rural development, bank and financial services, climate action, energy, media, sustainable development, communication services. So there's enormous opportunities for non-governmental grants and funding as well through the EU. We can move to the next slide. Who else is investing in Ireland? Well, there's tons of American companies that are coming into Ireland, especially now that Ireland is the closest EU company to the United States. And we've even seen that before Brexit, as American corporations and companies started to anticipate that the UK was going to leave the EU. So who's coming in? There's a lot of global tech companies, 9 of the top 10, global pharmaceutical companies, 8 of the top 10, medical device companies, 15 of the top 20, financial services firms, 50% actually of the world's leading firms are now investing in Ireland. Foreign direct investment giants based in Ireland you might recognize: Google, IBM, Apple, Facebook, Pfizer, LinkedIn, and GSK. Grania, I'll turn it back over to you. I think Claire is now going to take...
Thank you, Greg. Claire, would you like to lead us in on the tax piece and discuss some interesting tax facts for us?
Can everyone hear me?
Yes.
Yes. I am going to go through an overview of taxation in Ireland and some of the reliefs that are available. So we'll start with corporation tax. So as mentioned earlier, we have a 12.5% rate of corporation tax for active trading profits. We also have a 25% rate for passive income. That would be more rental income and investment income. The 12.5% rate also applies to dividends received by an Irish holdco from companies resident in other EU member states or in a country with which Ireland has a double tax treaty, provided that the income out of which the dividends are paid is trading income. If the dividends are paid out of passive income, they'll be taxed at the 25% rate. And as you can see from the slide there, Ireland has an extensive double tax treaty network. Next then is value added tax, VAT. VAT is added to the supply of goods and services in Ireland. And the standard rate of that in Ireland is 23%, and we have reduced rates of 13.5 and 9%. We also have lower special rates of VAT for the agricultural sector of 4.8 and 5.4. So while VAT is added to the supply of goods and services in Ireland, goods that are exported from Ireland to businesses in another EU member state generally are not liable to Irish VAT. And a VAT zero rate applies to supplies of goods transported to a destination outside the EU VAT area, and also the supply of goods transported directly outside the EU VAT area by the purchaser, where that purchaser is resident outside the EU VAT area. So the next slide then deals with the research and development tax credit. Perfect. So the R&D tax credit is a credit of 25% of qualifying expenditure and can be offset against the company's corporation tax bill. So it's offset against the current year first. If there's any unused credits, it can be thrown back to the previous year. And if there are any unused credits after both of those, they can be reclaimed from revenue in equal installments over 3 years. Now, there are very stringent guidelines as to what does qualify for R&D, but qualifying expenditure must involve systemic, investigative, or experimental activity. It must be in the field of technology or science. It must involve one or more of the categories basic research, applied research, experimental development. It must seek to make scientific or technological advancement, and it must involve the resolution of scientific or technological uncertainty. Next is capital gains tax, CGT. So this is a tax on the disposal of assets rather than on income generated. The companies resident in Ireland are subject to corporation tax on their gains at CGT rates. The current CGT rate in Ireland is 33%. And normally the charge to capital gains tax would be determined by the residency of the person selling the asset. But there are specific assets that will always be subject to capital gains tax in Ireland. And one of those would be land or buildings in the state. And similarly, the sale of shares of a company, which derive the greater part of their value from land and buildings in the state, will always be taxable primarily in Ireland, regardless of the residency of the company or of the shareholders. It's just one of those peculiar things that we have. So then the next slide deals with stamp duty. If we could move on. Yeah. So stamp duty is a tax on certain instruments, including the transfer of property, land and buildings situated in Ireland. And there are separate rates for residential and non-residential property. So the residential rates would be 1% on the first million and 2% on the balance. Non-residential are 7.5 on the full value, and the stamp duty is paid by the purchaser of the property. The startup exemption is a relief which is available to startup companies who incorporate on or after the 14th of October 2008 and begin trading between the 1st of Jan 2009 and the 31st of December 2021. And the relief is linked to the amount of employer PRSI paid in Ireland in a particular year. The relief is available for the first 3 years of trading, and any unused credits after those years can be carried forward to future years. And then the next slide, the last one for me, talks about the Special Assignee Relief Programme, SARP. This is aimed at employees who are assigned by their employer to relocate to Ireland. To avail of it, there are some conditions that must be met. So the employees must be a full-time employee for 6 months prior to moving, and they must be moving from a country with which Ireland has a double tax treaty. The employee must earn in excess of €75,000 a year to avail of the programme. So the income tax rates in Ireland at the moment are 20% income up to 35,300 or 44,300, depending on your particular circumstances. And then anything over that is taxed at 40%. under the SAR program, 30% of income over 75,000 is subject to relief at the higher rate of tax, and it can be claimed for 5 consecutive years. Where the SAR relief is claimed, employees can also receive a couple of benefits from their employer without any adverse tax consequences. One would be 1 home trip per year, including members of the employee's family, and then school fees in Ireland up to 5,000 per child per year. And then lastly, for me, it's the knowledge development box. And this is a relief on income from qualified assets, and it entitles the company to a 50% reduction under corporation tax, meaning that income from qualified assets are taxed at a 6.25% rate. Now, qualified assets are those created from qualifying R&D activities, as we discussed earlier. So it would be like a computer program or invention, which would be protected by a qualifying patent, things like that. So income from those effectively is at 6.25%. And that is an overview of tax in Ireland and some of the reliefs available.
Claire, thank you very much. That was very informative. And if anybody wants to ask some questions at the end, Claire would be happy to take questions. If we don't get to your questions again, we will be happy to take questions by email. So I suppose on your discussions from income tax, Claire, I'm going to roll on to my slide about employment law. So I suppose as an employer, and if you intend to employ people or are setting up a business that will employ people, you'll need to be familiar with your responsibilities and your employees' rights. There's a wide range of employment legislation governing employment law in Ireland. The Employment Equality Act prohibits discrimination in a wide range of employment and employment-related areas, including recruitment and promotion, pay, working conditions, training or experience, and dismissal. The same act, the Employment Equality Act, also penalises discrimination as treating one person in a less favourable way than another person based on the following grounds. Those grounds are gender, civil status, including single, married, separated, divorced, widowed status, civil partners, and former civil partners. There's potential for penalisation on the basis of family status, which refers to the parent of a person under 18 years of, or the resident primary carer or parent of a person with a disability. Sexual orientation, religion, which means religious belief, background, outlook. Age, age does not apply to a person aged under 16. Disability includes people with physical, intellectual, learning, cognitive or emotional disabilities, and a range of medical conditions. Race includes race, skin color, nationality or ethnic origin, membership of a traveling community. So in addition to the above, the Workplace Relations Commission would also have a code of practice in relation to grievance and disciplinary procedures, which states that employers should have written grievance and disciplinary procedures. If you do not dismiss an employee, if you do dismiss an employee, you must be able to show that you have fair grounds for dismissal and have followed a procedure. So I suppose the burden is to show that you haven't unfairly dismissed an employee. Another piece of legislation relevant for employers is the Organisation of Working Time Act 1997. Under the Organisation of Working Time Act, the maximum average working week cannot exceed 48 hours, and the average is calculated over a 4-month period for most employees. With regard to contracts, in Ireland, employees cannot be placed on a fixed term contract indefinitely, and there's also a prohibition on concurrent fixed term contracts. So after 2 or more continuous fixed term contracts with a duration of no longer than 4 years, if an employer wishes to continue this job, they must employ them on a contract of indefinite duration, that being a permanent contract. where a fixed term or specified purpose contract expires and the individuals is re-employed within 3 months, the individual is deemed to have continuous service. An example of that, I suppose, would be, say, a teacher who's let off or laid off for a summer period. I'll move on to the next slide, which also touches on employment law. So I suppose maternity leave is a fundamental issue as well. So maternity leave is a protected right regardless of how long the employee has been working. The legislation law covering the maternity leave is the Maternity Protection Acts 94 to 2004. Maternity is paid for by the state for 26 weeks, and there's an option for an additional 16 weeks unpaid. Maternity leave from an additional contribution towards maternity leave from an employer directly is discretionary, and obviously a member of the staff is entitled to the 26-week period of paid leave from the state. So legislation protects and ensures the protection of employees' rights during this period. Just in relation to minimum notice, if there's a termination piece in relation to unemployment. So under the Minimum Notice and Terms of Employment Act 1973 to 2005, employees are entitled to notice if you're being let go. Minimum notices are calculated, and we've outlined the minimum notice periods in the box below. With regard to minimum wage, there's an obligation to pay a minimum wage of €10 per hour. However, there are some circumstances such as an apprentice situation, people being under the age of 20, people being employed by close relatives. There's an exemption in relation to this minimum wage legislation. Another obligation as an employer is you must give employees pay slips. In relation to leave as well, nearly all employees are entitled to annual leave and public holidays from the time they start work. So most employees are entitled to generally 4 weeks paid annual leave for each leave year. And just, I suppose, for your information, and I can share information on this if required, Intrio, INT or EO is a service from the Department of Employment Affairs and Social Protection that provides a single point of contact in relation to employment and income reports. So I'm going to move on to Greg Rinckey now, who is going to discuss business etiquette in Ireland.
So etiquette in business is similar, but it's also different in Ireland, as we learned. Irish office hours are usually 9 to 5:30 with an hour lunch break. And I will tell you that the Irish are very punctual. And that is something that we learned very quickly in Ireland is when a meeting starts at 5:30, that's the time it's going to start at. So it's very important to be very punctual with the Irish. The Irish also do like to take their hour lunch break. It's not as common, I think, as in the United States, where a lot of our employees have a tendency to eat at their desks. Irish bank holidays are New Year's Day, St. Patrick's Day, of course, Easter Monday, Christmas Day, St. Stephen's Day, May Day, June bank holidays, and there's an August bank holiday and an October bank holiday. Employees for each day are entitled to the day off being paid, an additional day of annual leave, and an additional day's pay are paid off within a month of the holiday. Bribery and corruption in Ireland, it's less of an issue there in Ireland than in the United States. Ireland is a pretty transparent country. It actually ranks, Transparency International ranks the US 23rd out of 180 with a score of 69 or 100, which is a decreasing figure. Ireland actually ranks below that at 18 with an increasing score of 74 to 100. So bribery and corruption is not something we see much of in Ireland. Networking is key. And that's the biggest takeaway that you're probably going to take from today is the Irish are very social. A lot of networking is going to revolve around the pub or getting a coffee or a tea. So it is very important to get out there and to meet people. And we'll see how that kind of plays out as COVID has kind of changed it. but one of the first things we saw opening in Ireland were the pubs. So it's my takeaway that I believe that that's going to come back and be an important part of doing business in Ireland is networking. It can sometimes be a little bit more difficult for American companies to break into Ireland, especially if you're not prepared to spend time over in Ireland. Next.
And enjoy a pint of Guinness, Greg. Would I be correct in saying that?
Yes, be prepared to drink a lot of Guinness.
Perfect. I'm going to roll out the IDA slide. So I'd like to introduce you all to Emmanuel, who is going to talk to you about the role of IDA in Ireland. Emmanuel, I'll hand over to you.
Thanks, Grania, and thanks, Greg, and to ready for really informative and very interesting information. It's great to be here with you guys. It's a great opportunity for us to partner up with people who really know what they're doing, but are basically very often fundamental questions, address fundamental questions for people who are coming into Ireland. My role in the IDA is to head up the Irish government's Inward Investment Agency for North America, where we get about 70% of our business, 70% of our business on an annual basis, and as an organization, we've been around for about 70 years. So you would imagine that we'd have some idea of what we're doing, but it's amazing how often we come up with things and circumstances. So we put ourselves in the middle between government, the client, and the environment. And our objective is to partner with our client. And what that means is put ourselves in a place where people feel comfortable asking questions. How do I find staff? How do I find a building? How do I get in and out? How do I find healthcare? How do I get talent? One of the key questions. And the thing that we bring to the table is knowledge and experience. And we bring knowledge about the industry across all sectors. We would operate across 9 verticals, all of the ones, technology, life sciences. We're talking about banking, new emerging companies, fast growth companies, companies who feel they have to find their feet fast in order to be effective. And by partnering and bringing our knowledge to that environment, as a government agency, we also are in a place to influence the environment. What that means is your queries and concerns get front page billing. So from that point of view, we can help you make the right decision. We can make sure the environment is right. It's about 245,000 people employed in Ireland in about 1,200 companies. Almost 900 of those come directly out of the United States. Grania, we might go on to the next slide if you don't mind.
Perfect. Pat, could you get the next slide, please?
Thank you. It really just gives you some of the ideas, a little bit of meat, and really these slides are not going to give you all the meat. But we have about 50% of our clients for more than 10 years. So this is not a transactional relationship on either side of the fence. There's substance there. Companies are choosing Ireland as a place to either create, launch, support a new product, or to support existing markets in well-established new countries, mostly within the European Union. About 50% of the business that US multinationals do from in the European Union. But look, a third of our clients are actually in Ireland for more than 20 years. That's what I would call a long-term stable relationship. And what that says very simply to me is that somebody somewhere feels comfortable with what they're getting in return. It's interesting. I remember when Intel, unfortunately, or otherwise, I can remember when we started dealing with Intel. I'm around that long. We had a formative relationship with Intel for almost 20 years before actually landing some business. And they're still there today, more than 20 years on. And I guarantee that they were doing back when they came in first. So the capacity to change and pivot within the economy, within the infrastructure, and having the ability to rely on government policy as being long-term supportive of what companies need and expect for the future is really key. Maybe we just go on to the next slide if we may. It's very important to be able to demonstrate to individuals, particularly people who might be joining us for the first time, that Ireland has a strong track record in new companies from the United States into Ireland. And I think what you'll find there is that companies, not just tech companies and financial services companies, but life sciences, for example, as an that made an investment of almost 200 million last year. Allergan have been in Ireland for more than 15 years and have thousands of people employed. Abbott, similarly, individual companies whose brand names you will recognize immediately there. And again, the emphasis here, the point that's being made is that over a long period of time, Ireland has been able to demonstrate that through thick and thin, let's just reflect back quickly what happened in 2008. And we all remember that pandemic. It was a financial services pandemic, where in Ireland's case, as an economy, we shrank overnight. Unemployment exploded from 4% to 16% in a matter of 18 months. And until the current pandemic, which is a medical pandemic, a viral pandemic, our unemployment is 4%. The capacity of the economy and the learnings that the Irish government acquired during that time demonstrates our capacity to be a long-term, reliable strategic partner. Very important from your perspective, irrespective of your scale, irrespective of your sector, in terms of planning your future. These companies and a great many more have come in during that period of time and found it to be a successful and not just viable, but useful and highly valuable environment. Maybe we'd go on to the next slide, if we could. So why do companies come to Ireland is a fair question. I mean, let's just look for a second, very briefly, at the fact that US companies, more than 6 billion in annual international sales, more than a third of sales are into international markets, into the European Union. Nationals selling from Ireland, over half of their revenues on an annual basis go into the European Union. So capacity to operate from the inside of the European Union, which is one of the top, if not the second most or largest financial entity across all of the globe. So if you're going to join, and soon we're about to lose one of the most important partners there, the United Kingdom. Brexit hasn't gone away. Brexit is very much a part of our lives going forward. So if you're planning to access the European Union as a market or service companies that are there already, very important that you're operating from within that economic bloc. But the fundamentals are there. You need to be competitive, and Ireland's competitiveness, as ranked by IMD, is consistently 1 or 2 over the last 10 years. You need to have the capacity to plan and scenario plan, and I've touched on that a little bit, just by demonstrating our capacity to come out of what was a financial crisis, to retain long-term, and over 60% of our business is annual repeat business. But one of the core issues, and that's been addressed to some degree in terms of employment law, is which you will have unfettered access to talent on a pan-European basis. Really important, because Europe is a complicated environment, multicultural, multilingual, and from that point of view, essential that you can find the right talent and bring them to work with you. And of course, dare I say it, I don't know how well my accent is going down, but I can tell you clearly that culturally there's closeness between Ireland and the United States, and a real sensitivity and awareness of how American corporates work and what they look for. We might just quickly go on to the last slide, if I may. Because what this is a microcosm, just one back. Really what a microcosm of what, that's the slide, thank you, of what the IDA sets itself out there, sets out its stall in terms of being able to provide for clients. Really, I would go back to my opening comments. It's about partnership. It's about participating with clients on a partnership basis and helping them realize that their objectives are, and to influence the environment so that you can be successful, and to reassure you of our long-term commitment to far direct in our current economy and our economic future. Thank you very much.
Emmanuel, thank you very much. That was very informative, and I think I can take from that, what we can take from that is we're a safe pair of hands.
I think that's an
Yeah,
experience.
exactly. So we'll move on to our next slide. And as I said to you earlier, Greg Rinckey can speak from experience from setting up in Ireland from the US and establishing in Ireland. Greg Rinckey, hand to you.
Thank you, Grania. So establishing in Ireland, there's a few things you need to know, and I'm just going to touch on these quickly. And these are the corporate structures and company structures in Ireland. Company law in Ireland is governed by the Companies Act. That's the starting point. And there's different types of structures that you can form in Ireland. You have a private company limited by shares. Basically they have the contractual capacity of a natural person, and such the ultra-virus rule does not apply to them. They have limited liability, which is important, and share capital. LTDs must have a constitution. It can have a single director if desired, and they can have a maximum number of members, 149. The other type of setup is a DAC. DACs, which are designated activity companies, they have limited liability as well, and they would have a memorandum in their constitution which must state the objectives for which the company is incorporating. There has to be at least 2 directors for a DAC, and there's 2 types of DAC, which is basically a private company limited by shares with capital, and the second type is a private company limited by guarantee and having a share capital with capacity. The other type of company that can be formed is a company limited by guarantee. They have limited liability, but there's no share capital. And they must have 2 directors. And if they have a constitution, it must include a memorandum, which includes an article of association. The other type of establishment in Ireland would be by forming a public limited company. PLCs have both limited liability and share capital. They must have at least 2 directors, has to have a constitution, which includes a memorandum and articles of association. And then, of course, the last type is an unlimited company. Unlimited companies may be public or private. They must have at least 2 directors, and they have unlimited liability. Next slide, please. So how do we incorporate a company in Ireland? To incorporate a company in Ireland, certain documents, depending on the type of the company being formed, must be filed with the CRO, which is the company's registration office. There's also an express incorporation scheme, which will allow the incorporation of a company within 5 days. If this express incorporation system is not available to you, it takes 2 to 3 weeks to incorporate. So it can be fast, or it's actually faster in Ireland than in the United States. Naming your company, the CRO is in a position to refuse your company name where it's the same name or too similar to another registered company, or if it's offensive or would suggest the state is somehow sponsoring your company or used words that require prior permission to use. Companies can reserve a name for up to 56 days prior to the incorporation, so you can reserve. Company management. All companies require at least 2 directors, with the exception of LTDs. Companies also are required to have a company secretary, which can be one of the directors, with the exception of LTDs, where the secretary must be a separate individual. Corporate body must act as secretary for another company. And while most companies have limited liability, directors still have a legal obligation to act in the best interest of the company. This is where we see a lot of litigation. Business name versus company name. Incorporated companies may trade with a different name than their incorporated company name. This alternate must, however, be registered with the Irish CRO. Next slide, please. Residency. At least 1 director must be an ordinary resident in the EEA, which means being in the EEA for at least 183 days per year. If 1 director is not a resident in the EEA, the company may instead pay a non-resident bond, which lasts for 2 years and costs €1,957, inclusive of VAT. After incorporation, the company registers must be kept up to date. These include register of members, register of directors and secretaries, and register of debenture holders. Company must prepare yearly financial statements. Most company structures can apply for exemptions to audits, but this is generally only available for very small companies. These statements are required to be audited by a registered auditor. Annual returns are to be provided to the CRO yearly, and these returns must include details of the company's directors, capital, the auditor, registration numbers, and the company's financial statements. Smaller companies and those that are a subsidiary of an EU parent company or of a company established outside the EEA can file abridged financial statements. And to avail of this, the liabilities of these subsidiaries must be guaranteed by their parent company.
Thank you, Greg. And I suppose just speaking on the safe pair of hands on our next slide, Ireland's response to COVID. So the World Health Organization's special envoy, Dr. David Nabarro, has praised Ireland's response to coronavirus pandemic at a sitting of the Oireachtas in Ireland. And he was noted to comment that he rated what we have done to a high level. So it's a testament to our government and our nation and what we do. So the Irish government, along with National Standards Authority of Ireland, have published a consolidated practical guide on how to manage business continuity during the COVID pandemic. This guide includes a section on the recovery of processes and business post-lockdown. The advice included setting the response time objectives. They had a very clear roadmap in relation to the reopening of the country in Ireland, and we were advanced and we were actually in a position to reopen earlier. So obviously they prioritize specific activities to agreed capacity, which enabled organizations to identify strategies to shorten the period of interruption, reduce impacts, and enable the timely recovery of prioritized activities. Obviously, an organization should consider backlogs and time needed to recover lost information, complexity and scale of recovery requirements, or the need for specialist equipment with a long lead time. So I suppose what we're seeing a lot of in Ireland is screens. So people on front lines, shops, supermarkets, we're seeing a lot of clear plastic screens to protect employees. And I suppose there's a burden on an employer to make sure they implement protective measures to protect employees. So in addition to the above, the Government of Ireland offered temporary relief for businesses, including a wage subsidy scheme, special social welfare payments to those employees that have been affected by COVID, emergency measures in the public interest, and obviously protection in relation to tenants. And they implemented a ban on notice of terminations and evictions of tenants during the COVID period. So moving on to our next slide, how can Tully Rinckey help you and your business? And again, it's how can IDA and how can TP Fox help you and your business? If you've any questions about how we can help, please don't hesitate to contact any of the panel speakers who will be more than happy to assist you in whatever queries you may have. So I suppose the mission of Tully Rinckey is to provide quality legal services to our clients in a timely manner at a fair price using a team of highly skilled and motivated people, emphasising specialised training and advanced technology. From Ireland, and what's core to me as well is obviously access at partner level, availability of solicitors who will give you an answer and give you the result that you want in a timely fashion. Again, just mentioning, we have 12 offices across the US and Europe, with offices listed in the point below. Again, we're a full service international law firm, and we're committed to our client service and developing an intimate knowledge of each client's needs and objectives. We collaborate closely with our clients and work diligently and effectively to help them achieve their goals. Guided by a team of orientated philosophy, we encourage ongoing communication with clients to ensure that we understand their objectives and can easily accommodate their changing needs with an in-depth knowledge and legal experience. We're able to address the most complicated issues and focus on what matters to our clients. What matters to our clients is getting our clients results, and that's what we're good at doing. So our attorneys here offer legal services and representations to all types of industries. Our thorough knowledge backed by a deep well of resources enables us to understand your particular legal issues and help you work towards your business goals. Obviously, we have a presence in the US and Ireland, So you'd have the benefit of having access to solicitors on both sides of the water, which is useful if you're seeking to set up potentially in Ireland. So just on that note, I'll hand you over to Greg Rinckey again, who can discuss how we can help American companies entering into the Irish market.
So Tully Rinckey, we can assist in the incorporation of your Irish operations, including the registration of your business name, the allotment of shares, annual returns. Tully Rinckey can also act as your legally required named company secretary, so that you don't have to, find one over in Ireland. We can also assist in the drafting of the company's constitution that fits your needs. Our experienced property team can also handle the purchasing or leasing of your office space, which is very different in Ireland, as we learned. Be prepared for high rental costs, even higher than New York City rates. Also be prepared that you have to pay to fit up your office, and you have to pay to restore the office to the way it was when you move out, which is very foreign to American businesses. We can also assist in partnerships, joint ventures, and collective property investments. We can assist you with any immigration matters or visas for your employees and investors. And the other thing that we can do too is we can make introductions. As we know people in the Irish market, don't be afraid to reach out to us. And if we know someone, we're more than happy to make an introduction for you. Our team also specializes in international tax and cross-border planning, domestic tax services, including assisting in any tax audits and interventions, capital markets, and structured finance and asset and project financing. Our finance team can also assist in the fields of asset finance, banking, and finance derivatives. And like I said, our Dublin office can make introductions with Irish clients, and we're more than happy to help you with the Irish IDA and Enterprise Ireland, because I find them to be the key to success in Ireland.
Thank you, Greg. And just finish up, I suppose, our practice areas. We have a wide range of practice areas. In Ireland, our core practice areas are property, corporate litigation, funds, banking, finance. And we've set out a list of our various service offering in the States. And again, just to reiterate what Greg has said there, we are happy to make referrals or point you in the right direction to ensure you can incorporate your company. Again, Claire TP Fox, this is what they do day in, day out, and obviously give tax advice. Emmanuel is highly versed in pointing people in the right direction as well. So again, any questions you have, please come to us and we'd be happy to assist. So Greg, if you'd like to speak a little bit on your experience with the transition to Ireland and how you felt coming across and any difficulties or hurdles you would have faced.
Yes, so as we said, we all talk English, and as you can all tell from my accent that I am from Dublin. Of course, I'm being cynical, but one of the most important things is the Irish see things a lot differently than Americans, and especially if you're from New York. We tend to be very brash, upfront, and sometimes offensive. So one of the key things that I found in dealing with the Irish were that they don't like to say no to your face. They will kind of yes you to death or be very polite to you, and then you think you landed a deal and you did not. So it's very important that you learn how to read people and you understand the culture over in Ireland. One of the biggest takeaways from us was take the time to develop a budget for a startup. And you've got to know that you're going to probably exceed the budget, but you really need to try and stick to it. Cash flow is key to any business, cash flow over in Ireland. Remember, the other thing is when you're talking euros, euros are not dollars, and you have to take into account the conversion rate. So that's very important when you're budgeting as well. You want to make sure that all of your systems and processes that work for you in the United States are going to work in Ireland. And I will tell you that a lot of them do not. There's a lot of compliance issues that we touched upon. Employment at will is not the same in Ireland. You can't just terminate someone. So there's a lot of different issues compliance-wise where you can really step into some problem areas unless you're speaking to someone that understands the laws over in Ireland. It's very important to develop an employee handbook and have an attorney or solicitor vet it early on in the process and make sure you're enforcing the SOP or your employee handbook. Understand employee discipline and what can be done in the jurisdiction and what can't be done, and also what type of due process rights do employees have. Employees in Ireland have some rights to an actual kind of hearing or the opportunity to be heard before you actually discipline them. So it's very important that you understand that. Consider why. The other thing before you go to Ireland is you want to consider is equity appropriate? Does it make sense to offer partners over in Ireland an equity stake in the business? You really need to think that through. Be very careful when you plan and you review high cost items such as IT and accounting, because they vary very greatly. One of the things we found is you may be able to save a great deal of money by getting services that are outside of the Dublin area. The cost drops dramatically once you leave the Dublin market and you start getting to other places in Ireland. So you can sometimes find good accounting services. You can sometimes find good professional services that are even outside of the Dublin market. So don't be afraid to also establish in other locations outside of Dublin, because the rental and leasing expense is very high for the Dublin market. The other thing that you will find that we found very interesting in Dublin was professionals, including attorneys, accountants, most of them are in open offices. They do not have private offices, which we found very shocking coming from New York, where every attorney, even junior associates, have their own office with windows. Over in Dublin, because of the market being so tight, we found that the open office plan was prevalent, and that creates a lot of issues that you need to be prepared for. Have a plan for bookkeeping and have it overseen by an accountant by day one. Banking insurance challenges. I will tell you that banks in Ireland move very slow, almost unbelievably slow, that you have to keep kind of kicking them to get them to act on your bank accounts. And there's also not as many banks in Ireland, so they can choose to be a little bit more selective. Also, the amount of documentation that you're going to need due to international issues is going to be a lot of time and time consuming. Cultural challenges. There's tons of cultural challenges, and anyone that's on the webinar today, I would be happy to have a conversation, hopefully someday have a cup of coffee with you and talk to you about all of the different challenges over in Ireland. The truth of the matter is a lot of deals do get done at the pub. They're going to get done over a pint. So be prepared that if you go to Ireland, you're going to spend quite a few of your evenings after 5:30 in the pub talking to people and doing business. That's just how business is done in Ireland.
Thanks for that, Greg. And again, very informative. I'll open to the floor if there's any questions that anybody has. I'm conscious of time, so if anybody has any questions that they would like to ask.
Actually, Grania, I did have a couple of questions come in during the meeting, and one of them that I think a lot of people want to know about is, how do I get the 12.5% corporate tax rate? What qualifies as a trading company? So that would probably be a question for Claire.
Yeah.
Hi, yeah. So there are a number of factors that we would look at really to make sure that someone is actually trading. There are 6 badges of trade that we look at, which would include things like the length of ownership of the item. So say it's a piece of land. So have I bought it and had it for 20 years and done nothing with it? Or have I bought it, done work with it and sold houses? The other thing would be frequency of transactions. So have I just done one development, or have I done numerous developments? Supplementary work done on the asset. So have I just bought something, did nothing to it and sold it on for a profit? Generally, we would say that was capital gains and not a trade. And then the motive obviously would come into it. So what was your rationale for entering into this trade? Was it to make a profit as income, or was it for capital appreciation in the future? So it's sort of a mixture of all of the things together, and you sort of have to look at each one on a case-by-case basis, which is generally the case in Ireland for tax. It's very, there's very little is black and white. It's all very case by case. So you have to look at everything in together, really.
Yeah, if it wouldn't be an easier way to look at it, and I understand localities are there, but every company that comes into Ireland is given access to a guidance or a ruling, and really it's a question of active trading and substance. And what you're describing, I completely, absolutely agree with. But I think one of the points that you want to do here is to differentiate between passive and active income. And passive income, of course, is, you know, as a non-tax expert, something that people focus on from financial instruments, from financial services and investment income, and that attracts a different corporate tax rate. But that's not what we're talking about. We're talking about the standard corporate tax rate at 12.5%, which everybody's entitled to, essentially. And one of the points that we look for, and of course, when you're looking at international tax rules, looking at where the actual profit is generated, substance is always looked at as well, in terms of how you're going to justify the generation. You bring value, you generate value within the country, within a particular jurisdiction, and substance, meaning the actual employment, really important. Every company, you know, and it's a transparent process. And what I mean by that is that, you know, it's one of the key issues as a heavily internationalized economy, open economy. It's important to have the, it's important double taxation treaty networks that are out there, a fully understood, transparent and open process, and quite a quick one too.
Yeah, I would agree with that. There definitely has to be substance. I suppose that you have to look at everything in the round to make sure that people do qualify for the 12.5% rate, as opposed to the 25%.
Thank you, Claire. I just want to take one other question because I think it's worth hearing the answer to this. And this was multiple people asked this question, and this question was directed, I think, to Emmanuel. What advice would you give to U.S. small businesses if you could give us one golden nugget to doing business in Ireland?
The nugget I would give is to give us a call. Pick the phone up. We have 7 offices across North America. Just visit our website there. We can provide the information without any difficulty. And the experience is there. Engage in the process, partner with somebody early on. Be prepared. I think everything that you mentioned earlier, true, you know, there's cultural differences, but there's huge experience and no end of benefit to having a partner that you can trust and, you know, not push you in a direction, but provide you independent sourced information and that capacity to take it into in advance. So partnership and advanced planning, really important.
Okay, I think we're about out of time, but I appreciate and thank everyone for attending our webinar today. Ireland is a great country to do business in, and we will get the slides out to everyone that joined our webinar today. Don't be afraid to email us directly or give us a call. We're happy to work you through it and talk to you about our experiences in doing business in Ireland. Thank you for attending today.
Thank you, everybody.
Thank you.
Take care. Bye.
Bye.